All right, we've got gold making an attempt to go higher today, but subsequently showing signs of failure. But before we go further, a quick word from our sponsor. This video is brought to you by XNS, the world's largest retail broker, offering ultra-fast execution with no overnight fees. Find a link in the description below. So a few things going on here we want to pay attention to. Number one, we have this second high attempt to break above the previous high, which is a current record high for gold of 2009.43. Today put in a bearish key reversal day because it opened above yesterday's high and is going to close below yesterday's high. You can see how it's again testing support around this trend line as it did on Tuesday. However, given the bearish one-day potential reversal, it looks likely to go lower. As well, you can see that the relative strength index shows momentum, bullish momentum turning, and you can see that in the price action as well. So where does that leave us? Well, the breakdown of the double top will trigger on a drop below Tuesday's low of 2009.09, Wednesday's low, I'm sorry, of 2009.09. And that puts lower targets on the horizon, the most significant one being the 20 moving average of 2008.17 currently, and that is followed by this previous high of 2007.90. And then we could also use the weekly low here of two. Well, let me just double check that weekly low and make sure I get it right. I'll go into the weekly chart. Yeah, so we have this week's low of 2008.53, as well as going to have some significance because in addition to the double top, we also have a bearish weekly candle setting up in the form of a shooting star candlestick pattern. So there's a number of support levels on the way down. The bullish outlook overall is maintained, but short term, it certainly looks like gold is probably heading into a correction of some degree. What degree remains to be seen. Now, flipping quickly to the monthly chart because it lines up with the levels I mentioned a moment ago. This month's low is 2007.72. So I mentioned it as a weekly low. It's also a monthly low. So now the month is not over. We have to take that into consideration, but it is a price level before the end of the month to pay attention to, especially if gold falls below it, because that will be more bearish than what would be anticipated. And right now, the expectation would be for support to be seen around the 20 moving average or shortly below there in order to maintain this trend right here and the bullish momentum in this trend. And you can see that since the 20 moving average was reclaimed back here at the beginning of January, there's been no test of it as support. So the first approach to previous resistance as support, particularly in this case with the moving average, there's a good chance that it will behave as support once that area is approached, if it is approached. All right, that is it for gold traders. Have a great weekend.